Hey, it's the 1st of September, beginning of the month, pretty much the end of the summer now. So I thought I'd do a video with non-farm payroll coming up tomorrow. Good opportunity for me to throw some trade ideas out there for you and recap on what's been happening. I didn't do a weekend webinar last weekend. I know, sorry about that, guys. A few of you contacted me and said, hey, what's going on? Where's the webinar? But, end of the summer was quiet, bank holiday weekend, that kind of thing. I didn't think it was an awful lot of point. And the main thing is, it's just a continuation of what I said in my last webinar, which was gold expected to go down, silver expected to go down, stock markets expected to go down. I gave you the turning points. Actually, I didn't give you the turning points in the US stock markets. I gave them to my subscribers, and I rather meanly didn't give you that on the weekend webinars, but I had to save something for my subscribers. Anyway, a lot of you did subscribe to the US markets, and you've made significant amount of profit from that. So I hope that's paid off. Well, I know it's paid off, because a lot of you have written to me and thanked me. So I'm very grateful for your feedback, and I'm really happy to have helped you make some money. Okay, let's get on with it. Gold. So last time I spoke to you would have been a couple of weeks ago, so I think it was probably around here. Gold had broken out of what I thought was a counter trend move, if you remember, a bear flag. That's what I guessed it would be. A little bit confusing around this area, I will admit. I didn't expect it to get up much through 1780, and it got up to 1800. But once we broke down, it was quite clear what was going on. We even got a sell opportunity on the return to this trend line area here. Don't forget that gold has a big double top pattern, and I mention it every week, so I'm not going to show you again. But that is my key point for gold, and that's what is driving my expectations for lower prices in gold. Nice little 3 or 4 day bull flag here, a bear flag rather, I should say, bear flag. Very standard in a move to the downside. So we had several days of down move, little bull flag, and then broke lower, of course, with this nice big red candle, and down we go. So everything's been working quite well. I think the levels have been working quite well. Some of the bounces haven't quite reached my short-term sell levels. But anyway, I know a lot of you have run the shorts all the way down to where we are now, so I'm really pleased about that. Looks like silver will test the previous lows around the 1680 area. Obviously, this is a lot dependent on what the non-farm payroll number is tomorrow, and I'll discuss that in a few minutes, what I think might happen and what the reactions might be. But for now, obviously, what happens with gold and the dollar will probably be non-farm payroll dependent tomorrow, which I think is out at 1:30 UK time. Silver was also expected to drop. Silver chart, obviously, not very dissimilar to the gold chart. Once we broke out of that bear flag or ascending triangle, wedge, whatever you want to call it, that was the sell signal. Very basic, easy technical analysis. Little bear flag there, and then boom, down. We retested the low. I didn't expect that to hold at 1811. I've no idea why that was a low at the time anyway. So if you've been subscribing to me and following my analysis, you'll know that it's no surprise to me that that has been broken, and we continue lower. And the outlook basically just remains negative for gold and silver for the time being. I like to keep an eye on the longer term charts, the weekly and even sometimes the monthly charts. So quick look at silver for the monthly chart. We have broken the 100-month moving average, and the 200, by the way. That was a little bit earlier. 50, 200, 100. So, this really does look like we can continue to the downside in silver and gold. Now, a week and a half ago in the webinar, I talked about how the dollar should resume the bull trend. Nice bull flag there. We're in a longer term bull trend. Once we broke up above that, I was expecting the move to accelerate to the upside. Well, we certainly got that. I think I'm not sure where I was talking to you. I think it was probably here. Anyway, we have continued up, and we have retested the previous high, which was the obvious target. Anyone can figure that out. So since then, we've just traded sideways. Now, is this a double top, or is this a consolidation before the market breaks higher? There's no real clue here. We're getting dojis. We're getting small-bodied candles with long upper and lower wicks. So you can see the bulls and bears are battling it out. By the end of the day, we come back into equilibrium, very close to where the market closed the day before or opened in that morning. So there's really no clue what's going on. Personally, I think this is probably a consolidation before the market pushes higher, because we are holding above 106.60, which is a very important longer-term fib level. So the fact that we're holding above there, I believe, means that the dollar will break higher. But again, it's going to be dependent on the non-farm payroll number tomorrow, which let's talk about that. 300,000 jobs, I think, is the estimate for the number of jobs created in August. So there'll be a revision to July as well. Watch that. I think July was somewhere around 560,000. I'm not sure. Check that out yourself. But watch for the revision and watch for the number. We're in a weird situation now where the Fed has told us that interest rates are going to be going higher. and staying higher for longer. Don't expect an interest rate cut next year, which is what the market had begun to price in. That's obviously there's been a repricing since the Fed chairman made that kind of statement in his speech at Jackson Hole. That would have been Friday, not that long ago, seems ages ago. So with the market focused on the fact that we are probably going into recession, but the interest rates will remain high for a protracted period of time, the market will really be looking for signs of weakness in the economy that may actually force the Fed to cut rates next year. So I think that a weak jobs number would actually, ironically, be bullish for stock markets. We could see them push higher. It might ease fears of painful interest rate rises. What would it do to the dollar? Probably send the dollar lower. So maybe we would form a double top there, but we don't know. Anyway, look, those are my thoughts for tomorrow. Currency markets have actually one more thought. So if the number is strong, that could send stocks down quite significantly. It's quite an inverse reaction to what you would normally expect. Obviously, strong jobs number means that a lot of people are getting jobs. The economy is strong. There's more money in the economy. That would normally be bullish for stock markets, but I think in this case it would be bearish for stock markets because it would obviously encourage the Fed to raise interest rates and keep them higher for longer. We'll see if I'm right. Okay, Forex markets have been more difficult. Needless to say, the euro versus the US dollar has traded sideways. We've just seen the dollar index charts. It's not a surprise to see that. I've got resistance around the 101 area. We haven't quite touched it, but we certainly have got close, and it certainly has held. I'm really just judging that on Fibonacci levels. I'm really not coming up with strong signals in the euro because obviously we're just going sideways. So I'll move on. Now, if you follow me on Twitter, you will have seen me post a chart, if I remember correctly, pointing out that we are testing the previous high in the dollar yen, and the question is this quite a big double top pattern? Now, we don't know for sure yet. We've got a series of candles again just holding below the previous high for 2020 in July at 139.39. Today we have got through there. We got to 139.67, but we've pulled back. Now trading at 139.23. It will be interesting to see if we get a negative candle. In other words, if we get a red body on this candle today, that would indicate that we've probed higher. The bulls have looked for further gains in a breakout above the previous high, failed to get it, close lower on the day. That for me would be a minor sell signal and would make me think that there is a very strong chance of a double top pattern there, which of course would send prices lower through the autumn. Sticking with yen pairs because dollar pairs are a bit boring. Euro yen managed to push higher. This was horrible. This was really no use to me whatsoever. I really couldn't deal with this. We did get a couple of winning trades through that, but this is a little bit clearer now. Up through the moving averages, up through the trend line which goes back to June, up through some Fibonacci levels, and it looks like the euro has broken higher against the yen. So that's quite interesting as well. The weaker yen, and the euro is not exactly strong, is it? So some yen weakness there against the euro as well as against the dollar. Now this is pretty crazy. The New Zealand dollar versus Japanese yen. I had this 84.50, 84.40 support level obviously a couple of weeks ago. Now it's clear why. I had a fib level there, 23.6% fib, had the 100-day moving average, so it was an obvious support level. I didn't expect it to test that level every single day for 2 weeks and bounce off it, so it's been a really nice scalping opportunity. If you read the report and you've been doing that one, well, you've been bagging maybe 50 pips a day just trading that level alone. What more do you need? 50 pips a day? Pretty good, isn't it? 256 pips a week just for trading one pair and trading the same level over and over again. Anyway, we pushed up. We managed to get up finally to my target of 850. Now we could be heading back down towards that level. We've got the trend line, which goes back to, here we go. Trend line goes back to January. So it's the whole of 2022. And that's just creeping up at the moment, just above 84.00. So as long as we hold above 84.00, that 84.50, 84.00 area is going to be good support again, obviously. But if we break below 84.00, or for example, if we collapse 100 pips by tomorrow night and close the week below that, that would be a sell signal for the New Zealand dollar versus the Japanese yen. Now the euro has also bounced back against the Canadian dollar to test the upper trend line of, well, what is that? Is that a flag? Is that just a descending channel? I'm not really sure what it is, but one thing's for sure. We are testing the upper trend line at 132.00. We have a nice little trend line at around 132.40, which goes back to February this year. So clearly the euro versus the Canadian dollar is hitting resistance, and we would really need to get well up through 132.50 for a buy signal, and then we can push up another 100 pips up to the sort of 133.5 area. But I've got a feeling that's going to hold. We're just getting into overbought territory now, and we are clearly in a bear trend. So I think there is a strong chance the market will reverse from this resistance area. This is worth noting. The pound has been quite stable against the yen. The pound's been falling against other currencies, such as the US dollar, of course. The pound's been quite weak. But the pound versus the yen has been holding this trend line that goes back to May. 1, 2, 3, 4 tests of it. Real nice bounce off there. 161.00, 160.80 is the support level that we keep bouncing off. So just watch that if you want to try longs down there. Good luck with that. But I would suggest that a break below sort of 160.60 would be a sell signal. We'll have broken out of the sideways pattern and then we could drop quite significantly. Certainly 160. 159.50 would be the first target. That would be down here where the 200-day moving average is just intersecting this lower trend line. So the low 159 area would look like a reasonable target if we sort of break below 160.50. Sticking with currencies, I'm going to have a look at the crypto market. I do like to have a quick look at these. Now, I talked about how the Bitcoin was testing strong resistance up here a couple of weeks ago in my webinar with the 100-day moving average with the upper trend line. And I said, look, this is a pretty obvious bear flag, a big one. You don't see them this big very often, but it seemed to me like a fairly obvious bear flag. Down we went straight to the lower trend line. Beautiful. These crypto markets work on a technical level. They just work so well. Probably the best technical markets I've ever seen. Crawled along the lower trend line for a little while. It looked fairly obvious we were going to break it eventually. No surprises there. Break below the sort of 2800, and then we're now in another sideways consolidation pattern. But I think pressure remains to the downside. Yes, we're very oversold, but we can remain oversold in a bear market for an extremely long time. So any bounce meets resistance around the 21.5 area from that trend line, but I think we're going to eventually test the sort of 17.5 area, which is the low for this year. Okay, US stock markets, this is what I didn't tell you 2 or 3 weeks ago. I tempted you in to get some information from me on a subscription, and look, this was absolutely beautiful. 43.25, 43.35 was the resistance level. Just an obvious one. Trend line, 200-day moving average, just below the 61.8% fib. Trend line goes back to the beginning of the year. I thought we may just squeeze up, hit 43.60 and return, but we didn't even get that far. We just halted right at the 200-day moving average, right at the trend line, and down we went. So, first target was hit very quickly, 500-day moving average. That's fairly obvious. Nice little bounce off there. Gave us another sell opportunity at the 50% fib, and then boom, we broke lower and we finally got to my target. Now this was my overall target for the move. You can see why it is. It is a 61.8% fib in the short term. It is a longer term 23.6% fib, and there is a trend line going back to June there. So there is good support down here, and we're obviously getting oversold on the daily chart on the slow stochastic. So I'm really happy that this worked. I'm really happy that we dropped, well, 400 points. We've dropped nearly 10%. Which is all, yeah, it worked perfectly. And, even levels on the way down worked pretty well. 38.2% fib around 40.64. That certainly was a nice one. Once we broke the 100-day moving average, that was resistance. As you know, support becomes resistance when it's broken. Anyway, look, what more can I say? So it's all down to what happens around the 39.20, 39.00 area now. If we hold that into the non-farm payroll number tomorrow and bounce off it, maybe on a weaker non-farm payroll number, that would trigger a bounce, I think. We could be up around sort of 4,000 or 4,050. Nasdaq resistance around sort of 36.50, 37.50. That worked. Again, 500-day moving average doing the job there. We turned lower, went straight to the support level down here at sort of 12,700, 12,650. We paused there really briefly. I think that was that to the end of last week anyway. 100-day moving average there, of course. Once that was broken, that was resistance, and we've continued lower to what is obvious support just above 12,000, sort of 12,050, 12,050, 12,000 again. So we're hitting support level in both the E-mini S&P and the E-mini Nasdaq. We'll see what happens there. Longer term, I think these stock markets go down. I'm a bit surprised. That looks like quite a fast move, but actually I thought we would drop a lot faster and further. But I think we probably will hold this support level now just before the non-farm payroll number. And I've got a feeling we're going to squeeze in these stock markets. Obviously, I don't know what the number's going to be, but I just think there's a lot of shorts out there, and that's probably why we haven't gone down quite as quickly as I thought we would do, especially on that Powell speech on Friday. And I just think we need one. I'm not saying that this is going to happen. I'm not saying I'm even seeing anything here. It's telling me we're going to get a strong bounce, but I've just got a feeling that the market needs a strong bounce, flush out some more of those short positions before we have the next leg lower. We'll see tomorrow. If you would be so kind, if you've enjoyed this video, as to like, share, subscribe, all the usual things that help us YouTubers out, I would be very grateful indeed. And if you like what I do and you're not a subscriber, please go to my website, daytradeideas.co.uk. Search around the website. There are some deals on there. Actually, I'm going to put some links to some deals. It's the 1st of September. It's the end of summer. I'm going to put some links to some deals, some discounts in the box below, just to get you cracking if it's the end of the summer and you're thinking, right, I've got to get my head down, get some serious trading, or if you're just starting to trade and thinking, right, I want to really move into this now, I can help you. I can also go to the website. Some of the links on the homepage, if you click them, they'll do things like give you a free mentor session with me. You can book that with me, 15 minutes on Zoom. There's other, and as I say, have a look in the description box below, and I will throw some links to some discounts. Okay, that's it. Have a good day today. Good luck over non-farm payroll if you are trading it, and we will chat again next week.